Universal basic income is such a great idea with such positive benefits for society, but can we afford it? Let's find out. Hello everyone, welcome back to the Attic, welcome to Attic Philosophy. This is a series of videos on universal basic income. In the previous videos, we went through the philosophical arguments for and against universal basic income. In this video, we're going to talk about one of the crucial issues. Can we afford it and how? If you're enjoying the videos, why not subscribe to the channel, hit the bell icon to get some updates. So basically, I'm going to start with the way I think we shouldn't discuss affordability, but I see a lot of people discussing it, and I'm going to show you why I think that is a bad way of thinking about things. Then we're going to look at some of the basics of how government spending works and how money is created, and I'm going to try to argue using that understanding that, yeah, universal basic income is affordable, okay? We're going to look at some limits on that, but I'm going to try and argue that they don't relate to universal basic income in an economy like ours. Now, one thing I should say is a lot of the material that we're going to be covering here is relevant whenever we're talking about public spending, okay? So if we're talking about things like funding the NHS, bringing people out of poverty through benefits or any other mechanisms, these basic issues will apply. So a lot of what we're talking about here applies to general issues about government spending, state spending, not just universal basic income. Okay, so how should we not debate public spending? How should we not debate affordability? One thing I tend to see an awful lot, particularly with people on the political left who advocate higher public spending, universal basic income or otherwise, they say things like this. Well, look, if we can afford to spend however many billions on HS2 or on the Trident nuclear system or on this or on that or on wars or whatever, then we can afford to spend it on the NHS or universal basic income or whatever. I think that's a bad way of framing the issue for two reasons, okay? The first one is really simple. Just because you can afford this doesn't mean you can afford this, even if they're the same value, right? Because you might have already spent the money. If you see me spending 100 quid on a giant inflatable unicorn, you might think, yeah, that's a lot of money to be spending on inflatable unicorns. If Jago can afford 100 quid on that, surely he can afford 100 quid on this other thing. But that might not be the case, right? It might be that all I have in the world is £100, but all I've ever wanted, the thing I have most desired in my life ever, is a giant inflatable unicorn. So I spend my £100 on that, and it makes me happy, and that is it. I now have no more money. So just because I could afford that thing doesn't mean I can afford this other thing. Just because we can afford HS2 doesn't mean we can afford this other thing. Yeah, now sure, we might stop spending money on HS2, Trident, etc., and spend it instead on something else. Yeah, now that is true, but things aren't as simple as that, right? Because the idea behind spending money on something like HS2 is that it provides not just a social benefit to people, but it provides an economic benefit. Money comes back in. When the government spend money on industry in that way, it's meant to bring money back in. Now look, whether that is a benefit overall or not, and whether it would be better to spend it on something else, yeah, you can argue that. But the point here is, just because the government spends money on this one thing and you don't like that one thing, it's not always a good argument to go, oh yeah, don't spend it on that, spend it on this other thing. The second reason is, a lot of these things that we don't like spending money on, whether it's HS2 or foreign wars, particularly with foreign wars, these are kind of discrete events. They have a kind of a set amount of money going into them, although like for HS2 it keeps going up, and there's an end. Universal basic income is meant to be indefinite. It's meant to apply with no fixed end date, okay? So committing to universal basic income commits the government to spending year in, year out. Just because you've spent however many billions on this foreign war or on HS2 doesn't mean you can spend that amount every year indefinitely in good times and bad. So again, just because you see the government spending money on this and it's something you don't like, you shouldn't argue just because we spend it on that means we can spend it on that. So how should we debate affordability and government spending? Well, to do that, we have to kind of understand how government spending works. And again, I'm going to start off with, I think, a picture of how people think government spending works, which is wrong. And if we understand how this picture goes wrong, we can better understand how government spending actually does work. So I think for a lot of people, like the kind of intuitive picture about how government spending works goes something like this. There's you've got your hard-earned money. Some of it goes in tax into this big government tax pot. Somewhere in Westminster, they have a great big urn in which all your tax money goes. And then they take that money and they spend it on various public projects like road building and, benefits to people and various subsidies that go into fossil fuels and horrible things like that. That is not how things go at all. Okay, it's not the case that we pay our tax in and the government pays it out. So how does it work? Well, to understand that, we first have to ask an even more basic question. How is money created? Well, it's got something to do with the banking system. So again, let me paint a picture on how I think a lot of people think the banking system works, which is wrong, and then we're going to see how it actually does work. Okay. So this intuitive picture about how banking works, there's your hard-earned savings, you deposit them in the bank says thank you very much, and then the bank can lend that money, together with everybody else's savings, out to anybody who wants to take a loan or a mortgage or whatever. That's not really how it works. How does it work? It goes much more like this. You go along to the bank and ask them for a loan. You'd like to borrow a certain amount of money, say you'd like to borrow £1,000 to do something, and the bank says, yeah, sure. And what they do is they write down two numbers. They write down £1,000 in your current account, and they write down in their accounts that you owe them a debt of £1,000. Okay, that's an asset for them, it's a debt for you. You take that £1,000 and you spend it on fun stuff, and then over time you pay that £1,000 back to the bank. Probably you pay quite a bit more with the interest, and once you've done that, that is the end of your debt to the bank. Here's the important point there. That money the bank lends you doesn't come from anywhere. It's just a number they write down in your current account. When they write down that number, that money is created from nowhere, okay? That is £1,000 that didn't exist before. And when you pay that money back to the bank, that £1,000 doesn't exist anymore. It's not like the bank takes it and passes it on to anybody else or anything like that. Money's created when the bank credits you, and that money's destroyed when you pay off the debt. Banks create money and banks destroy money. So often when I start telling people about this mechanism, I get this kind of weird glazed look, and then they start looking at me like, are you some kind of communist or something? Is this some kind of conspiracy theory? So let me read you a quote. Not going to tell you who it's from. See if you can guess as I'm reading it. In the modern economy, most money takes the form of bank deposits, but how those bank deposits are created is often misunderstood. The principal way is through commercial banks making loans. Whenever a bank makes a loan, it simultaneously creates a matching deposit in the borrower's bank account, thereby creating new money. The reality of how money is created today differs from the description found in some economics textbooks. Rather than banks receiving deposits when households save and then lending them out, bank lending creates deposits. Okay, so who are these crazy communists saying this kind of thing? It's the Bank of England in their blog on 2014. And I think, when it comes to money and money creation, I think we can probably take their word for it. Okay, so if that is the way in which money is created and destroyed, how does that relate to government spending? Well, it goes like this. So first up, we have the government here in the House of Commons. I really hope at this point you are appreciating my amazing drawing skills. So the government, they go along to the Bank of England and they say, can we have a loan, please? The Bank of England says, yeah. And they do those two things. They create a number in the government's borrowing account and they create a debt for the government. Okay, then the government have access to that money and they spend it around society on roads and on people and all that sort of stuff. And then that money circulates around the economy, multiplying as more goods are created, etc., etc. And then from all that economic activity, we as a society pay a certain proportion in tax back to the government, effectively paying it into that account in the Bank of England, writing off a certain proportion of that debt. So that's the cycle. The Bank of England creates money for the government, it's pumped into the economy, and we pay it back in tax. Here is the crucial difference between your loan, your mortgage or whatever, and the government's loans from the Bank of England. The government doesn't have to pay back exactly what it borrows, okay? Because the government owns the Bank of England. You have to pay back your debt to the bank, but the government doesn't have to pay back exactly what it borrows. It might do that, it might balance the books, but there's nothing to say that it has to, okay? There's no real negative consequences for the government if it doesn't pay that loan back because it owns the Bank of England. This concept we hear again and again from politicians at the moment of we must balance the books. There's no economic reason for that. That is a political decision. It is, in effect, a debt it owes to itself, and there's no reason to pay those off. Okay, so given this understanding of how government spending works and how money creation works, why isn't the government always creating money and putting it into the economy? Well, actually, it does it quite a lot already. Perhaps the biggest example of this is back after the financial crisis in 2008-9 in the UK. In 2009, the government put about £500 billion in today's money into bank bailouts. Where did that money come from? Was it through foreign investment or foreign loans, or did we all get taxed more that year? No, there was no extra tax that year. We didn't pay for it. It was created through quantitative easing. Basically, the government or the Bank of England creating that money out of nowhere. And it was a really bad use of quantitative easing in that example because the government gave that money over to the banks with very little strings attached, and the banks basically sat on that money. It didn't circulate into the economy. The rich bankers got richer and it didn't benefit most people in the slightest. But that's not to say that it can't be done in a better way. A better way, of course, would be to do quantitative easing, to create money out of nowhere, to put that money directly into the economy. How would you do that? You would be giving the money directly to individuals, to citizens. In other words, you would be doing a universal basic income. So there's a more or less direct argument here that if you're going to do quantitative easing, creating government money out of nowhere, one of the most efficient and fairest ways of distributing that money is directly to citizens through a universal basic income. You definitely don't want to be giving it out to the banks with very few strings attached so that maybe they can get generous and lend it out to people because, that didn't happen. But I guess there is a bigger question there, right? Still, if all of this is true, why doesn't the government just create huge amounts of money and just pump it into society? Why have we had 10 years of austerity? Why have we had an underfunded NHS? Why doesn't the government basically just create huge amounts of money, give it out to everyone, and we can have full-on luxury communism right now? Well, there's basically two limits to this process. One is economic, and it's got to do with inflation, and the other is a political reason. First, let me tell you a bit about inflation. It is a teensy-weensy bit boring. Inflation is basically how the value of money goes down over time. Okay, so back when I was in high school, if I put a £1 coin into the vending machine, I could buy 4 chocolate bars. Lucky me. At uni, I could get 2 out on a good day. Nowadays, if I go down to the humanities building, I'm lucky if I get 1 bar out putting a £1 coin in. That's inflation. Okay, is inflation a bad thing? Well, it's not wholly a bad thing, right? If you have debts, the value of the debt goes down over time. So if you take out a mortgage for £100,000 and then over time you get compound inflation of 100%, that mortgage is basically only £50,000 to you. But by the same token, whereas it's good for people with debts, it's bad for people with savings. So if you're doing your savings by sticking £100 under the mattress, over time, that's only going to be worth 50 quid to you. There's also kind of a link between inflation and unemployment. This is known as the Phillips curve. It's an inverse relationship. So as inflation goes up, unemployment goes down, and that's a good thing. Now, this isn't a really guaranteed tight relationship. So back in the 70s, there was the oil crisis and stagflation. That relationship just went completely out the window. And with increasing globalization, so impacts from foreign economies on our own, the link between unemployment and inflation, it's not quite so clear. Anyway, so inflation isn't always a bad thing, but it is a bad thing if it gets too high, if the level of inflation gets too high. So a really famous case of this is in the 30s in Weimar Germany, so pre-war, interwar Germany. They had major problems with hyperinflation. You can see historical photos of workers being paid in suitcases full of notes. And then they would take that suitcase and they would run down to the shops because the value of things would have gone up so much in that time that their suitcase of notes wouldn't be able to buy, bread or whatever. That's just a disaster for an economy. So you've got to avoid hyperinflation. Okay. If there's too much money being pumped into the economy from the government, yeah, you can get inflation. Is that going to lead to problems of inflation, problems of hyperinflation? No, it's not. There's just no way a modern economy like the UK economy, propped up by the Bank of England, is going to be subject to hyperinflation because of government spending. This is particularly true in bad times, right? So in bad economic times, the government putting money into society, making sure that there's support for people who are unemployed, propping up businesses that otherwise aren't doing so great through government spending, through money creation, quantitative easing. That is not going to lead to hyperinflation. It's probably not going to lead to inflation because what are your alternatives, right? If it's, do we create money to prop up this business, all the business goes bankrupt and all that money vanishes and then all the people get unemployed, that is going to create bigger economic problems compared to putting money into the company just to prop it up. It's not huge amounts of excess money that is then floating around the economy on luxury goods or whatever. So what you can do here is you can have a mechanism that goes along with your public spending, with universal basic income or whatever, so that in good economic times, money creation is less because there's plenty of money going around society as it is, and maybe you just kind of focus that money on the poorest levels of society. But in worse economic times, like what we're facing at the moment with COVID, money creation increases, government spending increases, more government spending is targeted on keeping people in jobs, keeping companies going, things like that, okay? So you could have a version of universal basic income which is variable so that in good times the level goes down apart from the very poorest, and in bad times the level of payment goes up. So I also mentioned there's a political limit on public spending, on money creation. Okay, so imagine this. Imagine you're a politician who's been in power in the UK for the last 10 years. And imagine it became widely understood that the government can create huge amounts of public money and spend it on things like job creation, job retention, the NHS, that kind of thing. I think there would be an awful lot of public anger if that was well understood, and it would be directed at you. So if you're in that situation, would you really want people to understand how government spending, public spending works? No, you wouldn't. I mean, if you're the kind of person who wants to avoid the blame, which you probably are if you've been in government for the last 10 years, you're going to want to avoid that. So you're probably going to want to go around saying things like, oh, we've got to balance the books. You're going to use all this kind of neoliberal ideology and say, well, we can't just do government spending all the time. There isn't the money for it, etc., etc. And in general, for people on the economic right, political right, there's this ideology of the small state, small amounts of public spending. This idea, back in the previous videos when we talked about people don't deserve to have the government spending on them. This idea of the small state that only covers the basics like defending private property, right? It doesn't really help people economically. Part of that ideology is that you shouldn't be doing high amounts of public spending even if you can. So even if it's economically possible, even if it's economically beneficial for society, you shouldn't do it according to this ideology, and you shouldn't do it for political, ideological reasons. So there are these two limits to the way in which the government can create money and pump it into the economy, for instance, through universal basic income. One's an economic one, and I think I've argued that, yeah, that limit does exist, so we can't just pump indefinite amounts out there, but doing it through a sensible universal basic income that is set at a high enough level to reduce poverty, to reduce inequality, but that doesn't go crazy and make us all super wealthy, that won't lead to a huge increase, a problematic increase in inflation. The second issue, the political issue, that is just a badly motivated ideology, right? This is a problem that we find ourselves up against time and time again over the last 10 years. We've got economic reality hitting up against political ideology. Commentators often describe our times as we are living in neoliberal society. But that's not quite right. Neoliberalism is an economic idea first and foremost, but it's not really, or it's not solely economic ideas that are driving political decision making. It's political ideas. It's the idea of the small state, government non-interference. Government shouldn't be spending, even when it would be beneficial to spend, okay? That is a political decision. And that is really what has driven the last kind of 10 years of government policy. Okay, so let's wrap this up. I've gone into some of the details of how government spending works and how government money creation works, and I've said that, yeah, there is this economic limit to this, but that's definitely not a reason why the government shouldn't be creating money to spend on a universal basic income. So really, I think the opposition to universal basic income is a political opposition. It's not an economic opposition, and the political opposition is coming from the political right, the idea of the small state with small amounts of state spending. I actually think it's really important for us to know about this stuff, to find out more about this stuff, because then we can hold our elected politicians to account, okay? If we're going to be responsible democratic voters, we have to have the knowledge. Knowledge is power in this case. Thank you so much for watching, guys. That brings us to the end of this series of videos on universal basic income. I hope you found it enjoyable. I hope you've liked watching, and I hope that you've, like me, come to appreciate the benefits of universal basic income and how it is affordable in our society. I'm going to continue discussing loads more issues like this on Attic Philosophy, so why not hit that subscribe button, hit the bell icon, get the updates. Thank you so much for watching. I'll see you here next time.